Hey, what's up, guys? Happy Thursday for everybody. Welcome to Tenacious Tribe. My name is Ruben Rodriguez. And in case you're still not aware of what I do here, I pretty much go through trading assets and perform some technical analysis on price action analysis on what they're doing based on my four or 5 years of trading knowledge and zillion of books and whatnot. A lot of time on the markets and good and bad days and all that. And off we go. What I got for you guys today? First of all, as I usually been doing. I mean, I don't usually follow every single day what the stock market is doing. The Nasdaq and S&P 500 as references here. But since we're going through this, then why not? I've written a couple of articles recently about what we should expect about the upcoming bottom of a stock market. Of course, we never know as a trader. We never know what the market can do. We can only look at stats. We can only look at the past. We can only look at how the market has performed in similar circumstances in the past, and we can sort of use the past as a good reference because humans do now what they did back then, which is follow their emotions to invest. And the charts are masters at showing these emotions, these ups and downs, and they tend to repeat themselves alongside history. Having this, that was explanation for me to have all these beautiful, ugly, I don't know, colorful drawings in my Nasdaq chart. What I got here, Death Cross was meant to be for something I had noted down for the weekly time frame. But I mean, what if concluded in those articles I was mentioning to you guys is that this market, just like the S&P 500, we can go through it. He's on a downtrend. He's in a bear market. With S&P, I didn't go through exactly the Nasdaq, but with S&P 500, I did go through the last recessions and bear markets, and I concluded that the odds are, or based on historical precedents, always without guarantee, because we do not control the future, unprecedented things might happen and all that. But based on the precedents I went through, this area here should be the worst case scenario where market bottom is still a long way from where you are right now. So it's supposed to answer some prayers and some calls for optimism that we've seen throughout the market and throughout investors because of this green candle we're seeing on daily time frame. Of course, it can reverse all the time. This might not. I hope not. I mean, I really don't care if it keeps on going down. Then I buy more, and then my dollar cost average strategy just has a better expectancy over the future. I buy more, but market does what it does, and you have to choose your strategies and adapt to whichever market circumstances the market is presenting to you, and also whichever market circumstances are a good fit, a good match for your buyers. Having this said, yes, okay, we've had a nice green week, but bear in mind that as per historical precedents, we can sort of rely on this price range to serve as a resistance for the time being, and there are good odds that the price might do something like this. Well, it's back into resistance, value zone, which is resistance here, and also a trend line zone, and boom, get back to upcoming support level. It might be something here also. Volume profile analysis told us that this is definitely a support zone here. I'm not saying support will hold. I'm saying it's gonna offer it's gonna pose some obstacles to the price. It's not gonna let them pierce straight away, at least on a first touch, so to say. If you're bullish on the market, I mean, I'm no financial advisor, but what I would do, as a trader, as a position trader, I would sort of wait for some sort of proof from the market. I would sort of wait for the market to do something like this. I would wait. I would definitely not trade against the trend. That's dogma number one for traders here. Just depends for beginner traders. I'd say if you're not a beginner trader, I mean, ideally you'd like to stack the odds in your favor. Sometimes it might mean trading against the trade, but you really have to be very experienced and know your numbers and know your craft and know that and prune your strategy in order to do such thing. Reason being, stock market over the past 150 years has always on the long run trended on the uptrends and always made new all-time highs. I mean, over the long run, it really does not represent an edge for you to short at least the stock markets. So yeah, so if you want to stack the odds on your side, especially if you're a beginner or if you're even intermediate, you're gonna have better odds of being profitable if you're long on the stock market, especially if you're long in right timing. And when could that be? When the market shifts its structure from a bear market to maybe a ranging market, so it breaks down the trend line. It means that it's not respecting the same structure, same bear market. It might resume, it might not. At least the bear trend would be losing strength. So break a structure, something like this, maybe ranging for a couple of months, even months ideally, and then boom, breaking the structure once again, breaking the ranging market structure once again, and closing and starting making a new higher high. Then ideally a new higher low, and that's how an uptrend resume. But for instance, breaking out from this level will give me a very good hint that the market might as well be starting an uptrend. Having this said, I've not come here today to talk about the S&P 500. If you're trading it, if you're trading stocks, be very careful. It's not an ideal time for a beginner, intermediate trader, even for the advanced trader to be honest on the stock market trading actively. I wouldn't reckon there are a lot of bullish setups. Just if you're doing it, just make sure your risk management is top notch. It's diligent. You're really paying attention and making your due diligence in order to make sure you're not risking too much or trading too much or trying too much stuff. Just be patient. It's normal. Market doesn't always go up. It doesn't always go down. Just be patient. Your timing will come. Take advantage of this market to bring your skills. Maybe to start already like screening some leaders, because these leaders are going to be the ones that like trading against overall trends, and these are going to be the leaders for the next generation of for the next rally, for the next bull rally. And I'm done talking about S&P 500. Let's go to what brought me here. The trending asset of the day, BHAT. Yes, this was the most traded stock on the stock market today. It's a penny stock. It's not that difficult to be the most traded asset on the stock market. Still generated a lot of curiosity this stock today, a lot of investor curiosity, and wow, no, yeah, I mean it's not as hard to reach or to make these gargantuan candles if you're talking about penny stock, because think about it, with 20 euros, I'm seeing the number here for as a reference. You can already buy roughly six positions here. So you can already increase. You can already account for six traded contracts here. Whereas if you're trading Tesla, which is a large cap stock, or Apple or Amazon, $20 would get you nothing. So that's also another thing I'm looking for when I'm looking for trading assets, trying to filter volume with price, multiplying them. Still, this humongous volume chart is still more than enough to trigger my curiosity. Once again, it was the most traded asset in the stock market today. And when I saw it, I saw something that I liked very much, although it's a penny stock. What was it? Yeah, I'll go through let's start from the beginning, of course. Let's draw some levels. It's not so relevant, but at a certain stage, if the stock does trade close to all-time highs. Then this should be a relevant level. What else do you see here? This should be a relevant level. See the wicks here rejecting this level. These wicks, well, for sure. 1, 2, 3, 4, 5, 6, 7, 8 wicks. Boom. This is another resistance level. Most likely. A lot of bears over here selling it here. What are they gonna do when the stock gets back to the level? They're gonna sell again because back here they thought, or the odds are they're gonna sell again unless they're fundamentally invested in another perspective. They're gonna sell again. At that point, let's see if the bulls meantime have gained some momentum and can overpower the bears here at this level. What? Okay, so we got first few levels. I it's I guess for support we can place our levels here because we saw that at this level there were 224,717 million contracts traded. I would typically prefer to see a larger bar here, which validate the volume even further, or although on the daily time frame we're talking, wow, we're talking about a 263% increase in one day. This is penny material, of course, not my cup of tea, but still irrelevant data. What else? Something nice I saw here. A downtrend here, as established by this trend line. Long-term downtrend. I'm talking about the monthly time frame. My favorite. If you haven't seen the previous videos, now you know my favorite time frame. It regulates my emotions. I'll say it over and over and over and over. It prevents me from over trading and it prevents me from feelings that are not quite helpful if you're trading. As in, fear of missing out, fear of losing. Sort of protects you from those hard feelings which you bombard with on a daily basis if you're trading on a daily time frame or hourly or into daily. Good news spikes up, bad news spikes down. It can work for many people. It does. For me, it kind of does also. I just prefer it for this specific reason and for another few, which I'll eventually disclose also. Okay, downtrend. It's still not in a downtrend, but I mean, it was like sort of in a ranging market here, not making new highs, not making new lows. Short downtrend resumed here. Bam, with this breakout here. Okay, why do I like what I see here on the bullish side? On the bullish side, I like it because you see that there was a downtrend price action wise, and look at this beautiful RSI. Wow, same sort of stuff. I mean, of course, you like to have more data here, but we have a divergence, a bullish divergence on the RSI. On the RSI indicator, this is usually a very bullish sign. That could be there could be a reversal around the corner. This does not come in isolation, of course. This does not come in isolation because after a steep downtrend, now we have like a ranging market and a much more moderated downtrend afterwards, meaning that the bears are losing power. And now it seems like I would like to see a big. I mean, it was already like a very big increase, like 200%. Come on, but I would like to have seen a bigger candle to make sure this volume validates the big candle. Because I mean, when you have big volume, it doesn't necessarily mean that it's all buying power. It can be a lot of contracts traded. That's what this green candle measures. And a lot of these contracts are both selling to the bears, or the bears absorbing the buy orders. So we don't know. I do like to see a lot this pattern here. this RSI divergence. It's usually very bullish. How to trade this one? I mean, it's just a very risky trade. You really, I mean, I'll not even risk. I would not even like manage risk here with my stop loss. I'll instead use position size as pure risk management, as in instead of say having a 20% stop loss, because I mean you saw this candle represents a 200% increase. Oof. So if it hits here, which is the next level, we'll see. If it hits the target profit, you'd get like a 485% profit. If it does hit your stop loss, you would have lost. This is not possible. You would not have lost 200% because you cannot lose more than what you have here. So I don't know what's wrong with this indicator from TradingView. Okay, minus. Okay, this is negative territory already. Okay, I don't think. No, I don't think. This could happen. Negative territory. That's pretty. How much is it now? Still negative territory. What was the trading, by the way, at the beginning? €1. Oof. So I mean, what I'm saying is that if it does go against you, then it can be very, very, very damaged. Your portfolio can. So what I do here is, let's say, I don't know, let's say your account is $10,000, and usually what you do as a risk management means, you commit to 1% of the total equity. You commit to every single trade. Then of that, you win the trade, maybe you risk 20%, 30%, 20% stop loss, say. If you're a long-term and position trader, investor, and you want to give it buffer. If you have a day time frame, it doesn't even make sense to talk about so wide stop losses. And instead of doing that, why not just go for 0.2, 0.5, 0.3 percent of your total equity position, just like option traders edge. So as in instead of 10,000, 1% would be 100 per trade, for instance. What if instead of putting 100 in this trade, if it makes sense, of course, I'm saying this out of as an example, but I mean, if you have, let's say, $3 commission fee for stepping in the trade, and $3 commission fee for stepping out, plus $1 spread, or $2, it doesn't really, you're already like losing 7% to start with. So it might not even make sense on that in that sense. So you might need to use a wider position. But you get what I'm saying. So instead of using a $100 position, maybe you should use a 500. If you lose 50% of that, that's 25, which is 25% of 100, which is 0.25% of your total equity, something like this. Otherwise, you can just wait for this stock to start trading. First, need to interrupt this downtrend, which is something important. Something like here, then to step into this value zone and wait for a breakout here until the next hurdle, until the next obstacle. Same wise, that's the problem with problem or not with penny stocks. High risk, high reward, or high reward but high risk. So maybe one way for you to hedge against this and still be invested is maybe to try to downsize. And having this said, this is all I have for you guys today. Hope you guys have enjoyed it. I'm not saying it's going to go up. It might go. Just wait for signs from the markets. Trade carefully. Always very diligent with the risk management. And it was a pleasure being here. And take care, guys. If this is helpful to you, comment, like, share if you want. If you don't, just absorb and learn with it. I'm gonna be happy with it. All right, cheers, guys.